I'm going to start off with the stock market. This looks like a half cycle low to me. It's in the timing band for it. The 3-day RSI did get a little oversold. Let me convert that real quick. Okay, so you can see 3-day RSI got um, slightly oversold and then bounced quickly. That's again a pretty good indication that we're in the advancing phase of an intermediate cycle. We're going to have central bank plunge protection team protection in the stock market, so I'm not terribly worried about stock market trades. And I really think you should have at least 50% of your portfolio in stock market trades. It may be that the stock market is anticipating, as I said, maybe anticipating a Republican sweep, and that's why it's hanging around these highs. It may just be that central banks are just pumping so much money into the market and focusing it in the stock markets that it's very difficult for the stock market to go down. Either way, I'm not terribly worried about the stock market. I think if you want, you could put a stop right here on stock market trades, and if you got in down here at the bottom, then you'll be okay. You'll at least get out with some profits if this does turn back around and drop below this, what I think is a half cycle low. If it does that, then we may be transitioning into that triangle pattern that I had noted weeks ago. And there is some call to be, at least aware that this could happen because this came up a little bit short. When I see this kind of a pattern in gold, it usually means that a triangle is forming. When a rally, a strong rally, just kind of comes up short of fully testing these highs, it very often means that a triangle is starting in gold. I don't know if that's what this is going to mean in the stock market, but anyway, one potential warning sign that this looks like a half cycle low. So I'm going to just suggest just put a stop on your stock market positions right here. Again, I don't think you have to do that with your call options. If you're out to January or March, I think you got plenty of time, and you could just let the call options ride, because usually these triangles are continuation patterns and they would break out to the upside. And my expectation at this point is still that we're in the middle stage of a bubble, especially in the NASDAQ. And we're just kind of in this halfway zone here where things get volatile. And then once you break out of that halfway zone, then you get another move that's roughly equal to what this move did. So a T1 pattern per se. We might be in some kind of a T1 pattern in the stock market, and so we may have to bounce around here. So a stop right here, that's going to protect at least, you should come away with at least some profit in your stock market trade. And then if you've got January or March, April calls on QQQ, I would say you've got enough time to weather the churn and the midpoint consolidation, and then you'll have time to pick up some good profits on the way up. And if you did happen to get in down here at the very bottom and you've still got some profits in those call options, and we break below what I think is the half cycle low here, then just at that point just go ahead and lock them up, or if you just got a very small loss, then go ahead and lock it up. All right, moving on to gold. I'm starting to be a little bit concerned that the banks are trying to manufacture another takedown. We haven't seen much evidence of that in quite a while. They've gotten caught in at least two really major short squeezes, and I thought we were done with the manipulation of the gold market. But this day right here was a concern for me, and actually this rally is a bit of a concern. So either gold, we're either getting an attack on the metals to try and take it down, or gold is starting to smell out a currency intervention, and the ECB is going to try and turn the euro back down and the dollar back up, and possibly break the failed and left translated dollar cycle. So let me go to that first. All right, so we've got a pattern of lower lows and lower highs here, which is exactly the opposite of what we had here. This was clearly in the advancing phase of an intermediate cycle, and then this is the kind of pattern that happens when you're in the declining phase of an intermediate cycle. And then by all indications, this is a daily cycle low, and we've got a second daily cycle that is left translating and moving down into the next daily cycle low, and we're still pretty early. This is only day 9, I believe. We should have another minimum 20 days for this to move down, but there's a reason I don't trade currencies. They are the most heavily manipulated markets on the planet. Central banks try to manipulate their currency very often, and so even though all the signs are there that the intermediate cycle is rolled over and is moving down, I'm never going to rule out the possibility that the ECB can come in and suppress the euro and cause this all to reverse, come back up, make a higher high here, and then you would either have to say, we've got a daily cycle that lasted 7 days and then reversed, or you would just have to look at this as the central banks have managed to basically, they would just turn this all into one daily cycle with a successful intervention that then comes back up and makes a higher high. Then instead of this being a daily cycle low, which is what it really is, it would just, that would be negated as the daily cycle low. It would be moved to here, and then the central banks would get control of the currencies again, and then our second daily cycle starts from here, even though we've got a pattern of lower lows and lower highs in progress, and all the signs that the intermediate cycle is topped. Central banks can, if they have a successful currency intervention, they can break that. That's why I don't trade currencies. So now let me go back to gold, and then let me point out one thing. So we've got a lower low here in the dollar. That should correspond with a higher high in gold. Now let me go back to gold. All right. So here is that decline in the dollar, and you can see there was somebody defending against gold making a higher high here. So at that point, a little bit of concern, but the market still ended up nicely, so not terribly concerned at that point. This day, definitely concerned. We had closed over 1923, that breakout level from the 2011 high. Early in the morning, there was a major attack. I think it was 8,000 contracts over a 5-minute period. So that is a sign of an attack on the gold market, and I was kind of hoping we were done with those. So there was definitely a large player, again, almost certainly the banks, actively trying to suppress gold and making sure that it did not hold that breakout above 1923, and they managed to close it back below the 10-day moving average, which takes out some technical buying. And that was way overdone for that small up day in the dollar. I don't think this should happen naturally. We should have had just a flat day here. So that was a bit concerning to me. And then the real concern came on Friday. The dollar was down, and gold was just beaten back again, not allowed to get back above the 10-day moving average that is starting to turn down. So we need gold. We need the bull cartel to come in on Monday morning, especially if the dollar is down, and they need to push gold back above 1923, and preferably by Tuesday. I want to see a higher high, because the banks have got gold in in a risky position right here. Now, if I go to the miners, we've got an even bigger warning sign. During a period where gold was going up as the dollar went down, the short sellers and the bears have managed to manufacture a downtrend in miners, and this was a big warning sign here. Gold and miners should have made it a higher high. But instead, they sold this off hard into the close, and they managed to close GDX below the 10-day moving average. And they managed, on the day that should have just been a flat day in gold, they managed a gap down open. The buyers did come in and reverse this, but then on Friday again, with the dollar down, gold was prevented from getting back above the 10-day moving average, and the miners were hit again. And so we've got a downtrend in a period where the dollar is also in a downtrend, and gold was at least in a modest uptrend, even though it was not able to make a higher high like it should have. So they're shorting the miners as well. So more cause for concern. Moving to the weeklies, you can see, this just does not look good. This should have been the week where the miners pushed back above this 10-day or 10-week moving average and give us confirmation of a bottom. And instead, they attacked it into the end of the week, and they've created another weekly swing high. Same thing with gold, attack into the end of the week, and they just blocked gold from getting back above that 10-week moving average. So, it's pretty clear to me that we are getting an attack on the gold market. So we need to see quickly, Monday or Tuesday, we need to see the bull cartel come in and push gold back above this 10-day moving average, and preferably we make a higher high, because the banks they've manufactured a risky setup here. They are potentially taking control of the gold market. So I'm going to make a couple suggestions. I'm gonna say you put a stop right here. This is a at least a minor downtrend. We got our pivot right here at 1884, and then we started the uptrend. And again, like I said, it was pretty clear that uptrend was blocked and then prevented from holding above 1923. So I'm going to say you want to put a stop on your shares. I don't know that you necessarily have to put a stop on your call options. And again, like I've been stressing, don't bet more on your call options than you're willing to lose. So if the banks do manage to take down the gold market, during a period when we've got a lot of violence in the United States, we got a lot of uncertainty over what's going to happen with the election. We got the dollar in a confirmed downtrend. This is never going to happen naturally, not under those conditions. But clearly the banks are trying to take the gold market down. So if you can't beat them, you got to get out of the way of them. And so I think you got to have a stop right here at 1884. You definitely have to have a stop below 1873. If they can push gold down below either one of these pivots, then I think you have to just say, you just have to admit that the banks have gotten control of the gold market, and you just don't want to get it. You don't want to stand in front of the train at that point. And then the same thing with GDX. During a period where the dollar was going down and gold was going up, they have managed to attack the mining stocks. And this is probably one of the reasons why gold tends to be weak, is the miners are giving off what I would call a false signal, and it's taking some of the buying out of the metals market. So same thing, we've got an obvious pivot right here. at 3808, I think it is, something like that. If GDX goes below that, you've just got to admit defeat that the banks are in control, and they're going to manufacture another left translated daily cycle in gold, even with the dollar in decline, even with all the uncertainty going on in the country and all the violence, um, and you just got to get out of their way. All right, so for next week, just like I said, I put a stop right here below this half cycle low at what is this, about 34.14, I guess, and that should protect at least some of your profits in stocks if we are about to transition into a triangle. And for gold, you want to stop here at 1884 and definitely 1877. If the banks can push gold below that, then they're going to take out the technical buyers, because they will have reversed this pattern of higher highs and higher lows. They've already managed to manufacture a lower high here. If they also manufacture a lower low, then you've just got to admit, defeat that they are in control of the gold market and get out of their way, and then we'll try and pick a bottom at a lower point. At that point, maybe they do succeed in taking it down to 1800, and then we'll try again. But for right now, the gold market is definitely under attack, and we've got to have some kind of stop to get us out in case that attack is successful. What we really need to see is we need to see a big move up Monday or Tuesday, and we don't want to see this get broken. If it does, you got to get out and get back on the sidelines.